All right, so the last one we talked about the income statement. This one we're going to talk about the statement of retained earnings, which is the second one in our order. The statement of retained earnings is pretty basic one. It's only about 5 lines. It's very short. It doesn't deviate in length. But this is the statement of retained earnings, and what that does, it's a financial statement that reports changes in retained earnings, thus the name, of the business over a period of time. Now that kind of opens up another door. What is retained earnings? Retained earnings refers to the income, again, revenue minus expenses, that has not been distributed as dividends to its owners. Okay, well, there's another door. What is a dividend? A dividend is a transfer of some or all of a business's earned assets to its owners. So the best way to think about this, again, loose example, is a bank account. Think about your bank account. Your bank account right now, you put money into it. You can kind of see that as a revenue because that's the money that you've earned. And then the money you take out of it to pay your bills, that's going to be like expenses. And at the end of the year, you should hopefully have some at the end of the year left. Now, let's say at the end of the year, you also have a really good friend. And that really good friend has a birthday coming up. And you want to give that buddy $100 for their birthday. Okay? Have they done anything for that $100? Not really. They haven't done any service or they haven't given you a product. It's just a good friend. But you still want to give them that present. That's kind of like a dividend. You have a surplus of money in your bank account, your net income, and you want to give your buddy that money. They haven't done anything for it yet, or haven't done anything for it at all, other than just give you their time and their friendship. That's like a dividend. You're going to give it to the owners because you have a surplus and you think they deserve it. You're more or less giving them thanks. But that's what a dividend is. This is what a statement of retained earnings looks like. Again, this is the 5 lines, and this is the bare basic. You could have lines added to it depending on how you do it. Sometimes they call this a statement of equity, and so you have common stock added into it. This is the one that I prefer. So you start with your retained earnings at the beginning of the year, whatever you started the year with. And it's important to understand our beginning balances are always our ending balances from the previous year. They just carry over. So our beginning retained earnings as of January 1st of whatever year you're in, plus the net income. Notice the net income came from the last income statement that we just finished, the $100,000. That's going to give us an intermediate balance of $225. That's what we have available to give in dividends if we wanted to. Then we take out our dividends if we do give that birthday present out, $75,000. That's going to give us our ending retained earnings for this year, which is going to be $150,000. And as hopefully you guessed it, the ending retained earnings of this year will become the beginning balance next year. So that 150 will start at the top for the next year. If you are a brand new business, then your beginning balances are 0. So if this was a first started company that just started this year, our beginning retained earnings would be 0. And you would follow the same thing. Sometimes you don't even give out dividends. There are many companies that don't give out dividends, so that line item would be 0. And so that's the statement of retained earnings. Appreciate it.